Welcome back, and it's time for your Monday market. And the good news that we've been reporting on is that the price of petrol is coming down by more than R2 on Wednesday at the pumps. But I hate to tell you, there are already signs that this relief could be short-lived. Let's just take a look at this market indicator from today. Bringing up Brent crude oil prices, they rose today by more than 4%, extending gains as OPEC plus producers agreed to cut production slightly to bolster prices. Now, Brent crude futures for delivery in November is what we're looking at. It's the oil that we import for fuel in South Africa. OPEC, or the Organization of Petroleum Exporting Countries and its allies, which is a group known as OPEC plus, will reduce output by 100,000 barrels per day. Now, that is a very small cut, so it's seen as a token move. But top OPEC producer Saudi Arabia has made it clear that it is concerned by the rate at which oil prices have been coming down. So oil prices have fallen over the past 3 months from multi-year highs in March due to concerns that higher interest rates could slow economic growth and push many countries in the world into a recession. Let's look at Russia as well. It is a member of OPEC plus. It does not support the production cuts, but it is punishing European countries with reductions of gas, and that could have an impact. Gas and power prices are soaring in Europe, and many are expected there to try and switch to oil due to the higher prices. Let's discuss further. We're joined by our economic editor here at the SABC, Tshepo Mongoai. Great to have you, as always, every Monday. For economic watchers, well, for consumers, I guess it's a great relief what we're seeing on Wednesday, but the question is, how long will it last?
Well, for motorists, it's really good news because we know with petrol price adjustments, the impact is immediate, unlike with the interest rates where you still have to wait for 18 months along the line to start to see the full impact filtering down to the economy. So, but for public transport users, it's still going to be difficult for quite some times. We know that prices don't necessarily come down, but the good news is that at least there are some stability, that there won't be necessarily too much pressure in terms of prices going up when you start seeing prices starting to come down. This is the second one, and it actually indicates that maybe the worst could be over in terms of prices going up, inflation at 7.8. Speaking to economists, many are indicating that perhaps 7.8, it could be the peak. We might not necessarily see further pressures, but the risks are still there.
So before we look at the overall inflation picture, the cost of living debate all over the world. I mean, just with fuel prices, if we're looking at an increase in the oil price today of 4%, if OPEC is determined to bring up prices, it could also reverse surely next month, perhaps.
Well, we still have risks, both domestically and outside the country. Developments in Europe are certainly worrying, especially on the growth front, because, it's about 20% of our export market is in Europe. So it's important, it's in our best interest to see that Europe is able to trade and perform its economic activities. But with the current cuts that we're hearing about in terms of gas, it's worrying if indeed Europeans will be able to carry out their usual business activities, and how will that affect us as we seek and we look for a market to export our goods and services.
So that is interesting, because we were looking at the fact that, Russia sort of cutting off gas to Europe could lead many users to go to oil. But you're saying there's a bigger overall impact because European nations need to be strong for us to be strong. And they are complaining about incredible prices and a looming recession as well.
Absolutely. I was actually going to raise the point of a recession that the European countries are already facing. And what we are seeing could actually deepen that recession in Europe. And there's no way. That is definitely going to affect us. We have projections that shows that perhaps the third quarter of this year, we could see things starting to improve a little bit. But on the inflationary front, we know that we're not quite sure in terms of Eskom if they will continue to supply us the energy that we need. We have concerns with regard to wages. That also poses a significant risk. And the other point, I mean, if you look at the exchange rate, is also reacting to developments that we are seeing globally. The rand is coming under pressure. We've seen some strong movement in the US dollar. I mean, you've seen the pound also struggling against the dollar, because the dollar is really getting strong, and I think it's on the back of developments in Europe, and we are also paying the price because of our currency is getting weaker, and that is another risk.
And another is for fuel and a whole lot of things. And that is also about interest rates going up in the US. How does it affect us? That it seems like the messages are all on point at the moment around the world about interest rates going up.
I mean, we know that definitely whenever European countries or increase their interest rates, Thursday, the European Central Bank is expected to hike by 75 basis points. Domestically, the market is pricing about 100 basis points in the next meetings before end of the year. But we've been moving in tandem with what's happening, although we were very early in terms of interest rate tightening. So we'll probably pause and then allow them to move unless there are certain significant risks that actually is going to emanate. But everything has been priced. We do expect that, of course, the European guys are looking at 2% target there. Very high at 8%, 9%, 10%. So it's a long way to get there. And compounded by those risks, we cannot relax. We have to watch the space very closely to see how is all this going to affect us. But it's heartening to see that at least things are improving domestically. But
No, indeed. So when you say it's priced in, we may see interest rates going up in the US, but not necessarily the rand weakening at that point, and we won't feel that pressure to follow suit and raise our own interest rates. Is that what you're saying?
Absolutely. What you're seeing now, we know that the markets always look ahead. You know, it always factor in certain risk of things that could happen in the future. The issue of a recession in Europe is being priced into the market, but to what extent will it affect the local consumers? But definitely growth will be affected because we will battle in terms of our exports. There is another risk in terms of if oil prices continue to increase. I mean, a couple of weeks ago, we were talking about oil price coming down because of recessionary pressures. But we know that the OPEC, as you indicated earlier, they want to push up these prices. They've been going through a lot in terms of lower oil prices. So they would rather see more support in terms of those prices.
All right, so you're saying things are looking better, but it could change at short notice. In summary, you mentioned electricity, and we haven't seen load shedding for a while. So you're saying we can't get used to the lights being on just yet, actually?
I mean, it's actually a good thing. I just hope that in the current quarter we see more of stability in terms of electricity supply, because we have so many other factors that we are concerned about. But Eskom will actually be doing us a huge favor in terms of keeping the lights on, but we know that the system is quite unreliable. Things could happen overnight, that we lose the current power supply that we have. But hopefully they are doing something right. They've come up with a new plan that actually can bring some level of stability that we've been seeing in the past 3 weeks in the country, where they've not announced any significant power cuts. Of course, we still have a lot of risk of cable thefts. It continues to affect many parts of the country where people don't have power for 3-4 days because of those incidents. But at least, generally speaking, in terms of the supply of energy, for now, it's good news.
Long may it last. Eskom, keep the lights on. Thank you very much to our economics editor at the SABC.